Get the sound off of that. All right, we're live again. Yeah. Good morning, everybody. And let's get the video going here. All right, good morning, everybody. We're doing a live stream. Today is April 18th, 2024. Glad everybody's here. A couple of announcements really quick that I want to post out there. We do have Mastering the Charts Part 1. Mastering the Charts 1 is back, okay, where you have a 3-day class, April 27 through 29. And it's an all-day event, okay? There's a lot of information that we put in there. It's very interactive and a lot of questions, a lot of quizzes. Course has done really, really well to get you the basic foundation for Mastering the Charts Part 1, okay? The little more detail on that, again, April 27 to 29, you go out to our website and you can find where that information is posted, okay? All right, so let's minimize that. And I'm going to come back out to our homepage on our website. Now, as you're looking for the pre-market routine, you come to the homepage, My Courses, and then find the live trading room. And under the live trading room, get the pre-market routine, okay? So as we start off our pre-market routine each day, we're going to see what's in the news. I'm going to go along with kind of the information that I've collected over here. So as we look at the news events, okay, news is a lagging indicator. News reports something that's already happened, okay? Now, the stars may be aligned for a repeat of last August's stock sell-off, warns JP Morgan. That's a little bearish, kind of makes you feel uncertain about the market going up today, okay? Now, in the pre-market, we're showing some different information, and we also will kind of build on this. Now, this is what the media is looking at, okay? This is how the crowd forms their opinion and starts their day off, okay? So when you're looking at the news and economic events, you want, or the news particularly, does that news make you feel bearish or make you feel bullish? We also have Netflix earnings coming out. Weekly jobless claims at 212,000, fewer than forecast. But keep in mind, okay, that this forecast doesn't include all of the migrants or the people that have just immigrated here illegally into the U.S. This number is very much downplayed. If you were going to include all those people that are not working and living off the government at this moment, this would be a very bad number, okay? So we don't want to lose sight of the reality of, you know, jobs here in America and a lack of jobs with, you know, over, I think the number is like 10 million or more migrants have come in. So add 10 million to that number. Things are not so great, okay? Philly factory gauge hits its highest mark in 2 years. U.S. economy hasn't been on a hot streak like this in 2 decades. Okay. See, there's a little mixed behavior. Now, when you look behind the scene, you can see that the media controls public opinion, okay? And the thing is, he who controls the media controls that public opinion. So this is not to make a trade, but it's to help us understand what other traders are looking at. Today, we have a whole onslaught of different reports coming out. Now, please ignore the USDA crop report that was last week. I misread the calendar when I was looking at that earlier. This is a calendar for the reports for the agriculture, and I just saw Thursday and started looking down, and it says 12 p.m. crop report, which was last Thursday, the 11th. Nothing on deck today, so my bad. That was just a small mistake on that. So just kind of scratch it off your list there. We had jobless claims come out, again, kind of a fraudulent number. Philly Fed manufacturing came out, and as we look around at the stock or the equity indexes, not much of a reaction on the equity indexes at this point, okay? Now I'm going to go through a couple of other pieces of information as we gather information to understand that trading environment, okay? All indexes are an inside day with a narrow Globex range. Okay, so what does that mean? We've got our S&P is inside the prior day's trading range, and we have a narrow Globex range. Now, we have been tracking and documenting the Globex range and comparing that to the daily ATR on the equity index futures. Now, we have a narrow Globex range, okay, which is about 0 to 40% of the daily ATR. That's when the range is narrow. From about 40 to 70%, that's kind of in the middle. And 70% to 100% of the daily ATR or Globex range compared to the daily ATR is what we consider wide. Now, a narrow Globex range, we often have some big price movements. This is what we've been documenting, using it as an odds enhancer to understand the trading environment, okay? So narrow Globex range from 0 to 40% of the daily ATR implies that we'll have some bigger swings in the marketplace. If the Globex range is in the middle, between about 40 and 70% of the daily ATR, we are looking at kind of a choppy market condition. And if it's a wide Globex range, we're looking for the bear trap and the bull trap trade strategy, okay? So there's a reason behind and a trade application based on the information that we are collecting and accumulating, okay? So again, narrow Globex range on the S&P and an inside day. Now, inside day just simply means today's price action has not broke the prior session's low or prior session's high. Why do we use that information? Well, inside days are generally more choppy at the open, and our good trade opportunities usually occur around 10:30 to 11 a.m. Eastern, kind of right towards the end of the banks and institutions completing their order flow for today, okay? So all of these are key pieces of information that you learn when you're doing the pre-market routine and how we set up our trading day. So little quick summary. We're looking for some big moves today. But right now, no breakout trades to the downside or breakout trades to the upside on the equity indexes simply because of the inside day. Now, and we understand that the morning session is going to be a little more choppy as traders try to, or the floor traders try to figure it out, okay? Now, we do have well, it's not very light volume, but we do have light volume on the Dow 30 stocks, another odds enhancer. One Dow stock is down over 94 cents, which is Boeing, and we have three that are up over 94 cents. So the net results on that is that we have 2 up, and we multiply that by 2 to get a value of cash. 2 times 2, 4. Cash equals 4. Futures are trading at positive 12. Futures are overbought relative to cash at this moment. Now, that still doesn't make a trade. It just says, hey, futures are trading at a premium versus trading at a discount. When futures are trading at a discount relative to the cash market, we look to be a buyer in a demand zone. When futures are trading at a premium, we're looking for price to go into a supply zone for a trading opportunity, okay? Now, a little bit more on some of the pre-market information, okay? Now, we're quick look at some other pieces of information that are outside the price chart. Let me just come back to that. So currently, and this is another odds enhancer to tell us market conditions, Right now, we have the dollar and the 10-year yield right up here in the top two boxes. They're going in the same direction. When the dollar and the yield are moving up, equity indexes tend to move down. Okay? So we want to keep an eye on that. Now, if the dollar and the yield are mixed, we know that things are going to be a little more choppy as the market gets started. Okay? Now, dollar and the yield are inverse related to the equity indexes and FX and, of course, bonds. Okay? And we want to keep a close eye on that. The QMI, which is the NASDAQ pre-market indicator, developed by the NASDAQ exchange to help price the NASDAQ 100 index as it starts to open. Now we have a gap down. Now we had a significant gap down the other day. We got that more of a sell-off. Okay, a big drop at the open. Here we had another significant gap down. So with the NASDAQ 100, okay, or the NASDAQ NQ, it's pretty bearish right here towards the open. So we're anticipating that move down. Equate that to a trade opportunity. We have a prep screen zone set at 17,573, 17,513. Now, our prep screen zones are zones that are made and created during the regular trading hours and generally have higher volume during that time, okay? This is a retest of that area. As we look over on the NASDAQ stocks, we can see Apple's really quiet, Tesla's negative, Microsoft, Google quiet, and Amazon, okay, with Meta gapping up, okay? So as we're looking at the NASDAQ stocks here for the pre-market activity, we're seeing that things are somewhat quiet. And the result of the NASDAQ stocks being quiet is that we get a choppy sideways action, okay? Now, back to the inside day. On inside days, we also have documented, and is part of our pre-market routine, that gaps often fill the same trading day during an inside day. So as we look at the price right now, futures are up about 12.5 points. The gap fill from the prior session's close is lower, okay? So near the open, and based off of information gapping down and so on, okay, the QMI gapping down and looking for the gap fill, equity indexes would have to move lower to fill that gap, okay? So any move to the upside, and I'm noticing right now just that we have a late base group of candles in the overnight session. Look when that was formed, and that's around close by when the London session starts to open, okay? Price has already tested that area, looking for the gap fill. Markets start moving lower. We may look for the prep screen zone around the 10:30, 11 a.m. Eastern. Can happen earlier, okay? The other thing that I'll point out on the S&P is today is the 5th day, and yesterday was the 4th day that price closed lower. Now, when we're looking at the number of days, and these are both, one is an unadjusted chart, one is both are continuous contract, but one is unadjusted and one is adjusted, okay? Now that doesn't help us right now at the moment from what I'm trying to explain here. We have a number of down days in a row. Now, very often we have either 2 or 3 down days and then an up day. Now, you're kind of using a Fibonacci technique, or Fibonacci number sequence. When you start looking at the number of candles that move up and a number of candles move down, especially on a daily chart, S&P has been pretty good with this, okay? They often happen in 2s, 3s, 5s, rare for 8, and extremely rare for 13, okay? Yesterday was a fourth down day in a row, so I'm expecting today to be a down day, but a significant up move starting tomorrow. So as we start looking at that, we're looking to close lower than yesterday's low, okay? We need to keep an eye on what is below this area, okay? If we get a significant sell-off from news and or we have Fed speaker at 9:15, which is, he's speaking right now. Another Fed speaker, existing home sales, leading indicators, natural gas, Fed speaker, and another Fed speaker. Okay, so all of these are setting up as far as our economic reports. Yet if today is the 5th down day in a row, we want to be able to align with a demand zone later in the session for potentially a significant move back up tomorrow, okay, or even in the overnight sessions. I do want to point out on the S&P, we do have some unfilled gaps to the upside, okay? So dropping down to find the demand, a lot of debt space and a lot of consolidation here, pockets of points. There's not much resistance going back up, okay? Just a lot of folks being stopped out. In the dead space, if you have is between resistance and support, you have pockets of points, okay, which are low volume price drops, okay, big price move, but on very low volume, okay? So we have a lot of these areas that are almost like gaps is when the price starts to move back up, okay? All right, so just checking those out. Let's come back over to our pre-market routine. Again, all indexes are inside day, narrow Globex range. Yesterday was the 4th down day in a row. All indexes are below the 50 simple moving average. Okay. Again, the crop report does have a big impact on volatility. But again, please discard that. It's kind of a typo. I misread the calendar. Okay. Now, volume was light ahead of the economic reports, and volume remains light as we get close to the open. Now, light volume on the Dow 30 stocks, okay, as we look at the volume, we track that volume each day, okay, and we know what is heavy volume, what is light volume, and so on. If we have light volume, usually we have higher volatility, being that we're an inside day and the markets are a little choppier during an inside day, volatile, we may see some pretty big reactions in price at the open. Okay, so be careful, make sure your stops are in place and you manage risk based on your trading plan. Okay. Now, I should have been watching the crude oil, and we have that first 5-minute candle. We're still right in there. Now, I do have some rules for my personal trade plan for trading the open range breakout on crude oil. Open range breakout trade strategy is looking for that first 5-minute candle, taking a break above the high or break above the low or break below the low of that first 5-minute candle. Okay, we call that the open range breakout trade. Okay, now I use the Globex high and low, that whole range, and that range is $1.40. The daily ATR is $1.95. So it's a little wider at this moment, okay? It's on the wide side. So we want to make sure we know where the first supply zone is above the Globex high. And the first demand zone below the Globex low for the bull trap and the bear trap. Okay, so we have 80.68, 80.45, okay, for the bull trap or the bear trap, and up above Now, I tend to see that if we're trading the open range breakout trade here, it works best when we have a wide Globex session or a narrow Globex session. If the Globex range is between 40 and 70% of the daily ATR, often it is not a good opportunity to take the open range breakout trade, okay? Now, this is a unique pattern here. We teach this in Mastering the Charts Part 2. We have price coming down, and as we build this structure, you can clearly see where the resistance is at, okay? Now, this particular price pattern often has a pop out, breaks above the high a little bit, and then comes back down and makes that double bottom with a higher low, or it goes lower to make a V-shaped reversal or an inverse head and shoulders. So what we're looking at now is we just had that little pop out. We're anticipating this move back down, and we have limited risk. Okay, there is risk on every trade, but I'm going to set this trade up, Globex range compared to the daily ATR. I'm going to take this trade short, 82.29. And I'm just using a couple of micros. Okay, and then I'm going to place my protective stop loss at 82.67. Okay. Now, immediately I acknowledge, based on my two micro contracts that I'm trading, okay, I now have $81 risk. Okay. Now, on every trade, once you get into it, acknowledge, and I would even say out loud, I have $81 risk, whatever your risk is, depending on what your trading plan is, okay? Once you acknowledge the number for the risk, if you feel one moment that you are uncomfortable about that risk, you can't lose that money, take the smaller loss and step aside from the trade, okay? Take the smaller loss. Now, the risk is a little more elevated above this resistance. Now, we're looking at the price pattern, but we do have that pocket of points over here. So we have very little resistance, okay? Price could shoot up into that area. We're still expecting the bull trap and possibly the bear trap. Okay, so we'll keep that in mind. All right, now I'm running a little short on time here. Gold is also back at a breakout point. Gold is a lead indicator as to how things are either quieting down or escalating between Ukraine, Russia, Iran, Israel, okay? If we start seeing bigger moves on gold right now, silver, platinum, copper, okay, we have to acknowledge, okay, that there is news about to come out about the war escalating and such, okay? And that will have another impact, a bigger impact on equity indexes, commodities, and so on, okay? All right, so I'm already in the Japanese yen. We're on that trade. At the open, I would encourage you to watch for wheat, looking for a breakout on wheat, 541 and 2/8, okay? Or we're looking for that pullback. Soybeans is also in the zone. We can look at a confirmation entry above 1147, 6/8. Bean oil also looking for a smaller pullback and then a confirmation entry, 44.76. Corn is in the dead space, kind of between resistance and support. So we need either price to come down and hit support again and get that move back up. Okay. Bitcoin, trying to find some footing. We do have the halving coming up. Okay. And as we're looking at the equity indexes, anticipating the pullback, we want to keep an eye on the 5, 10, and 30-year bonds. They tend to move after the dollar and the yield move, okay? Remember, the dollar and the yield are moving up in the pre-market, okay? Gapping down on the NASDAQ pre-market. And now we're watching the 10-year, 5-year, 30-year to see what they were doing earlier, and some of our FX markets, okay? Now, FX markets and bonds, notes will move after the dollar and the yield, okay? As we're looking for that pullback, Euro is on deck right now. We had a breakout of that resistance, price coming back down to find demand. When looking at all of these futures picks that I post each morning here, one odds enhancer that you should be prepared to see is, are we looking at more breakout trades or support and resistance trades, or are we looking at supply and demand trades? Okay. What makes the difference, if we're seeing a lot of supply and demand trades, we know that banks and institutions are involved and the market may be more orderly, easier to trade. When we're seeing more breakout trades and support and resistance types trades, the markets can be more volatile and a little bit more rocky, okay? So all of the information that we're collecting in the pre-market is helping us assess the market conditions, anticipate which direction the equity indexes are going to move here at the open. Understanding, again, as I go back, inside days are choppy, designed to take your money. Trades usually happen on the equity indexes later in the session. And you can already see that IBM and Goldman Sachs go in opposite directions at the open, also implies a little more of that choppy conditions, okay? All right, let's see what we have setting up here. NASDAQ, we're looking for the gap fill. You may get a bounce here on the NASDAQ once it fills the gap. Dow, okay, price broke above the Globex high. See, we're getting some mixed market signals inside days, okay? Remember, there's a lot of information that we gather ahead of time to understand and assess conditions of the market, okay? Natural gas report came out. I do want to point that out here, that Miss Chris, thank you so much. Trading around the natural gas report. She's been tracking this for 84 weeks. The average range is 70 cents, the lowest since the study. Now, Forex Factory forecast 54 BTU from previous 24. So a sizable increase in supply. Okay, that's going to have bearish projections. Now, when there's an increase in supply and everybody kind of knows it, okay, this is their forecast. They have the news ahead of time. Generally, you can get a move up in price, but it's a sizable increase when that EIA report comes out at 10:30. So they're going to show a lot of supply. They want to run prices up to a supply zone before dropping the price. So keep that in mind around that 10:30 natural gas report, okay? So I'm going to sum this up, and yeah, it looks like we are getting that move down on the NASDAQ as we projected, okay? See, it's going to take you a little bit of time. If you're watching this on our YouTube live right now, you see that I just threw a whole bunch of information at you, okay? Now, each day we go over all of this information to help our traders understand the trading environment, not create a bias by making a single, not based off a single data point. We gathered a lot of information to understand what's going on outside the price chart, as well as what is going on inside, okay? Outside information helps us assess our risk as well. All right, so we're seeing we're seeing some more upticks than downticks. Okay, we're also seeing the trend getting high as the markets are dropping. Now that's a good sign. As the trend gets above 1.5, we want to look for a price on the equity indexes, especially the S&P or the Dow, to intersect with a demand zone. Okay. Looks like we got filled on something here. Up, our crude oil's moving up. I'm still going to look for the opportunity to take the trade short at 82.29, expecting after the pop out, a move down to find that potential double bottom. Okay. All right. So just as a reminder, coming back out to check our schedules. We have a lot coming up going forward. Mastering the Charts course for the weekend on the 27th, 28th, and 29th. We'll do a live trading room, and we'll finish up the rest of day 3. We also have our blockchain fundamentals coming out, and other things going on. So check our schedule to make sure you see where we're at. And I look forward to seeing you all next time. Have a safe trading day. Now, hold on one second. Let's come back out.